Welcome back to another episode of MHV's Off the Trail. We are joined today by Aaron Lindo, a consumer loan underwriter at MHV. Hello, Aaron.
Hi, how are you?
Awesome. Thank you so much for coming on the show today to talk about one of the most popular financial topics, and that's credit.
Yep, it's something that a lot of people talk about, but not everyone knows everything. So we're going to try to help you out.
Exactly. So today, Aaron, I really want to talk about a couple of things that people can do to start improving their score, right? I think everybody knows you need to have a good score, but what are some things that people can do to start taking steps to improve their score? Since obviously a good score is important for everything from loans to, buying a car, buying a home, all of that.
Yep, absolutely. Well, I would say, and I want to point this out because it's very important, time is the biggest factor when it comes to credit building. There aren't a whole lot of things that are actionable things you can do that are going to result in like an immediate improvement in your credit score, right? Whether you've been paying well or you haven't. Time is ultimately the thing that will drive the score upward. I would say though, there is one thing that almost anybody can do that's going to bring your score up if it's not so high right now, and that is credit. Keeping your credit card balances low or at zero. If you have a credit card of any kind or multiple credit cards, and you have balances on those cards, and you're carrying those balances over to the next billing cycle, your score will not be as high as it would be if you had those balances at zero. Right. So that's something almost anybody can do to get their score to go up is those balances down or at zero if possible. Your credit score is driven a lot by how much available credit you have showing up. So if you don't have a credit card at all, get one. That's number one. Get either a secured credit card or a regular credit card somewhere. And that's going to get you points you would not normally have. If you do, keep those balances down. That is the one, I would think, the highest thing on the list in terms of getting your score to go up right away. I mean, you can see those points go back as soon as 30 days. So it's a very quick time frame to actually have your credit score improve. Most other things are more time related. Like I would say things like keep your inquiries low, right? Don't apply for a lot of credit every year. The more inquiries you have, the lower your score will go. But again, that's not really a way to build it. It's a way to keep it from dropping. And then usually that's the case for most things. Like obviously paying your bills on time, that's, paying your cards and everything in a timely fashion will keep your score good. But it's not going to drive your score up per se. Like if you've had a history of late payments in the past, maybe, or some delinquency in the past, time is really the biggest healer when it comes to that, right? Like if you change your habits, you pay on time, time goes by, your delinquencies kind of get older, they fall off your credit report eventually, your score will go up over time. But it's not something that you can do in 2 months to turn your score around. It's just a matter of being consistent, doing what you need to do to keep your score better. So aside from that capacity factor, the whole keeping your credit card balances low, that is the fastest and biggest sliding scale that can drive the score higher if you need points right away. Everything else is definitely, be consistent, keep your inquiries down, pay your bills on time. If you can, avoid going into collections on anything. All of these things are going to hurt your score, but doing them right will build it over time very slowly. Like we've seen, when you're a new credit person, you just turned 18, you don't have any credit, right? And you start out somewhere in the 600 range, you start getting credit cards, car loans, things like that. And over time, years, your score will slowly just go up, right? It'll go from 6 to 7 to sometimes even 8, if you keep doing the right things. But it's a process. It certainly is a time process.
Time investment.
I do have people tell me all the time, how do I get my score high really fast because I like want to get a mortgage, or
Yeah.
you know, I want to get a good rate on a car loan, and I'm trying to explain to them, like, there aren't a whole lot of things you can do to just jump it, you know.
Right.
And that's, it's too bad, but that's the truth of it. You know,
Hmm.
it's like a
Hmm.
lot of times I have to tell people, you know, you need to maybe wait 6 months
Yes. Yeah.
before you apply again,
Right.
sometimes even longer. So it's definitely something a lot of people don't understand,
Yeah.
but
Yeah.
that's simply just the way that the scoring system works for the
Right.
credit bureaus.
And I think, the time is an important thing. And I don't, Aaron, I don't want people to hear you say, pay your balances down and think to themselves, well, I can't do that this month, but just do what
Right.
you can, right? Like do what
Yes.
you can to pay those down and pay a little more than your minimum balance if that's what you can do. Because
Right.
it's you're in it for the long haul.
Right. I mean, well, it's a percentage thing, right? So
Yeah.
any amount is helpful. Like if you're maxed out, like let's say you're totally maxed out on your credit cards,
Mhm.
right? And you know that you really can't pay them all down right away.
Yeah.
Any amount of a percent that you can get it lower, your score will improve.
Mhm.
So even if you can't take all of it and pay it all off,
Right.
you know, if you pay 10%, you're still going to get points back for that.
Okay.
Right. So it's a, you know, it's understandable. Sometimes you can't wipe your debt out entirely.
Right.
But you know, that doesn't mean that it won't help to do what you can, to try to
Right.
make a budget, to try to plan to get those balances lower as
Yeah.
soon as you can.
Yeah.
I also want to point out that when it comes to credit cards specifically, right, if you have a personal loan, that does not affect your capacity. That does not affect that point sliding scale I was talking about. So,
Okay.
you know, a signature loan, a personal loan, those type of loans are different types of loans. So they don't affect that scale.
Okay.
So some things that people do are they do a debt consolidation where they'll
Right.
take all their credit cards, pay them all off with a personal loan.
Right.
But what that does is it takes all of that available credit and gives it back to them right away because
Mhm.
they're going from maxed out to zero.
Right.
When you do that, you're getting all that capacity back, and usually your score will increase very quickly by
Yeah.
doing that. So you're not getting rid of your debt per se,
Right.
but you will increase your score a lot of the time because you're getting all that capacity back.
Right.
So that's one of the reasons we're offering that loan promotion
Yeah.
right now. So hopefully a
And
lot of
then
people
don't use your cards
take
again.
advantage of that. Yeah, obviously, yes. If you go back and use the cards again, your score will continue to go back down
Yeah.
based on how much you're using. But
Yeah.
the idea is, you know, save money, save interest, and hopefully improve your credit in the
Right.
process. So
Right.
that's why that's definitely the number one factor to bump
Right.
it up quickly.
So I want to go back to something you said earlier, and that was if you don't have a credit card, get one. So
Yeah.
explain a little bit about how that can help your score.
Okay, so that capacity thing that I'm talking
Mhm.
about, right? You don't have access to any of those credit points if you don't have a credit card. If you don't
Right.
have a revolving line of credit where you can spend and pay back and spend, you can't get any of those points available to you.
Mhm.
So if you're a new borrower, you simply just won't have a score as high as somebody who has a credit card because you
Okay.
don't have that availability. You can't show the credit bureaus, I have available credit, because
Right.
you don't have any right now. Like I've seen people who are older, you know, in their 40s, 50s, who, you know, don't really need credit cards.
Mhm.
So they never really had one.
Mhm.
And their scores sometimes are much lower than I would expect for someone who's always paid on time, always had great
Right.
credit, always, you know.
Mhm.
But they never understood that not having a credit card available to you doesn't allow you to get as high of a score.
Right.
So if I would say to you, if you don't have a credit card open at this time,
Mhm.
just opening one, you know, either applying for a regular credit card, or if your credit is, you know, not as good as you'd like it to be, or you're a brand new borrower,
Mhm.
a secured credit card, which
Yeah.
is something that can be guaranteed approved,
Right.
which is a great way to get started and a great way to get those capacity points right away.
Right.
You know,
Right.
so that is, it's, I tell every new buyer, every new borrower who's just starting with credit or doesn't
Mhm.
understand credit, that number one thing, get a credit card.
Mhm.
At least get those capacity points.
Now, do you have to use it to show does that impact the capacity? Should I use it at all? Like, let's say I don't have a credit card, I get my credit card. What are your recommendations in terms of usage? Obviously, you don't want to go and spend a bunch of money and
No,
max it out. That's bad.
Yes. Well, so this is the thing. To get the capacity, you don't have to use it, right? I
Okay.
mean, if you don't use it and you have 100% of available credit all the time, you're still going to get those points for having
Mhm.
that room. But using it and paying it off is beneficial because you also get credit for making on-time payments.
Okay.
So while the impact isn't as quick or large, it is one of those things, like I said, over time. So if you open a credit card and you pay it on time every month, your credit score will see, hey, you've made 36 payments in a row on time. Your
Mhm.
score will slowly improve
Okay.
over the years as you continue to do that.
Mhm.
But the capacity side, the thing where it says how much available credit do I have, you don't have to use the card at all to get those points.
Okay.
So if you're really concerned with using your credit card, think you're going to miss your payment, think you're going to forget about it,
Right.
that's fine. But at least have one. At least have one and have available credit showing up on your credit
Mhm.
report, because those points for basically for free.
Okay.
Kind of like give me points as long
Yeah.
as you just do this one thing.
Right.
But of course, the ideal scenario would be you get the card, you make a payment on it every
Okay.
month, buy something,
Right.
pay it off, buy something next month, pay it off, right? Because then
Even
you're
a little
getting,
thing, right? Like it doesn't have to be a.
oh yeah.
Yeah.
Yeah, I mean, definitely. Like when I started out, yeah, I just put gas on my card and paid it off every month. It was a
Right.
simple way to keep it going
Right.
over time. But yeah, so the capacity thing definitely doesn't matter if you use it or not.
Mhm.
Zero balance is ideal for that particular part of the score. But paying on time, using it, paying it off every month will also help your score improve over time.
Okay. Awesome.
But certainly in a small way, not a
Right.
big, like you're not
Right.
going to see, oh, I got 50 points for making an on-time payment. Like that's not how it works.
Yeah.
But over years, you could generate 10, 20, 30 points as you pay on time over
Right.
time.
Okay. Last question, Aaron. So
Okay.
you had mentioned, right? We talked about even paying a little bit more each month towards your balance is helpful.
Yeah.
Why, talk to us just briefly about like a minimum payment. A big piece of that minimum payment isn't actually going to paying down your balance.
Very true. I mean, well, for a lot of credit cards, yes.
Yeah.
If you look at your credit card statement, there was a law that was passed that requires them to show how long it'll take you to pay off your card if you
Mhm.
just make the minimum payment. And you can see usually it's quite a long time.
Right.
The reason behind that is because a lot of your minimum payment ends up just going to the interest on the
Mhm.
card. So it's hard to get ahead if you're only paying your minimum payment, especially some of these cards have very, very low minimums. You know,
Right.
like you'll have this huge balance and your minimum payment will be like $50 or
Right.
$20. And you're just thinking, how am I ever going to get out from under that? It's,
Yeah.
you pay $50, 20 of it goes to interest, 25 goes to interest or
Mhm.
something. So yeah, it's definitely good to budget in your mind. Okay, like how much do I need to put toward this to
Right.
really start making it move?
Yeah.
Your statement will also show you that as well. It'll show you how much you have to pay to
Mhm.
get it paid off in 3 years,
Okay.
which is nice because they can give you like an end goal.
Right.
So definitely, because those resources are available if you check your
Yeah.
statements and credit
Read your
cards,
statements.
or you can just make a budget that works for you as
Yeah.
well, just to kind of figure out how can I get ahead of this.
So anything you pay above the minimum, so let's say you do $25 above the minimum,
Mhm.
that full 25 actually goes towards your balance.
Yes.
So that's
Yep.
why even those little bits it may not feel a lot to a person to be like, well, it's only $10 more, but
Right.
that entire $10 is actually going to paying down your balance.
Right. An easy way to think about it would be like if you have a $50 payment and you know 25 of it's going to interest.
Mm-hmm.
If you make a $75 payment, now you feel like, hey, I've actually made a $50 payment. So you can feel like you've seen that movement.
Yeah.
That's exactly how that works. Yeah.
Okay. Awesome. Any other tips for us today, Aaron?
I would say the best thing is, pay attention,
Yeah.
keep a mindful eye on, your payment history, your credit.
Mhm.
There's plenty of ways to monitor your score. It's always good to just keep it in the back of your mind. This is something that I should pay attention to.
Mhm.
And it's so easy to do now. There's so many resources that make it easy to track, easy to get notifications when something changes,
Yeah.
keep your identity safe. There's lots of these things out there for everyone to use that are free services. They're fantastic ways to just be mindful of this.
Right.
And there are also multiple resources to learn more about credit, especially, on our website even. So
Right.
lots of great ways to learn more, get educated, and just stay vigilant.
Yeah, absolutely. Thank you. So the biggest takeaways today, one, it's going to take time, right? There's no quick fix to improving your score.
No quick fix.
but definitely start working on paying down those balances, because that's going to be your ticket, really.
Yeah, quickest boost, easiest boost for most people is if you don't have a card, get one. If you have cards with balances, pay them down.
Awesome. Well, thank you so much for joining us today, Aaron. I really appreciate it.
Sure, anytime. Thank you.
And thank you for tuning in. As always, if you have any suggestions for a topic, please email us at podcast@mhvfcu.com. We will see you next time when we go off the trail.